Hi Ritesh, welcome to Under the Bodhi Tree with Aryaman Huda. This is a show where I bring to everyone the inspirational stories of young leaders like you in India and around the world. So Ritesh, could you just give us a brief introduction of yourself and also tell us what is HDFC ERGO?
I've been with the company for now 15 years as the CEO of the company. We are one of the general insurers in the country. Uh, as you would know, private sector has been allowed into insurance over the last 20 years, and in this 20 years we've sort of grown to become the second largest private insurer in the country.
Right. So that's great, Ritesh, and I think this is a good time to tell you that the majority of our viewers are youngsters and youth, the Gen Zs and the millenniums as they call us, high school students. And on that note, Ritesh, how were you like in high school?
I have done my schooling across 6 schools
Wow.
in 4 cities
Wow.
in India and overseas.
Right.
My father had a transferable job, and to that extent, I was in Delhi, I was in Calcutta, Jaipur, Budapest. I've done the rounds as far as the education is concerned. The school time obviously is the most exciting period. You as a youngster are sort of looking forward to moving to the next level. I wish I could be back in school.
That's great, Ritesh. So, Ritesh, HDFC ERGO has a joint venture with ERGO of Germany, which is a company of Munich Re. And Munich Re is the largest insurer in the world. And along with, I think, Swiss Re, it accounts for the top 25% of the top 50 competitors. So, Ritesh, how has your experience been with a joint venture with, ERGO?
See, as you rightly said, sort of ERGO is part of the Munich Re group. Munich Re is the largest insurer sort of in the world, with presence in over 150 countries. I think both shareholders of ours, HDFC and ERGO, they bring in certain skills, certain knowledge base to us. While the Indian partner obviously gives us the understanding of India, of the Indian consumer, the very, very popular brand that HDFC stands for, the understanding of the Indian consumer. ERGO on the other side, through sort of Munich, gives us a huge sort of database in terms of knowledge around insurance and not only around insurance capacities, but also in terms of the product knowledge and the learning that they have built over the last 125 years in the area of insurance and reinsurance.
Right. And Ritesh, today is a very interesting day, and it is actually the first day and of like when HDFC stock is not trading, because HDFC has merged with its baby HDFC Bank, and now you are also a part of HDFC Bank. So, what do you think are going to be the benefits of you joining this franchise of HDFC Bank?
So yes, it's a very, very special day indeed, because the HDFC Limited stock sort of stopped trading as of 3:30 yesterday evening.
Right.
And so today, I mean, when you go in and see, you see a 0.00 against that name, and it's indeed something which is a very, very nostalgic thing. What this essentially means is that with HDFC merging it into its largest baby, the HDFC Bank, we now become a subsidiary of HDFC Bank. We hitherto used to work with HDFC Bank as our largest distributor, but now we become their subsidiary, and therefore they become sort of our 51% shareholder. And what this helps us with is that we are now able to sort of, HDFC it has a family of more than 10 crore customers.
Wow.
Across all parts of the group. And this gives us access to all of them. While we've been working with the bank earlier as well, but obviously now that relationship moves to a next level.
So, Ritesh, HDFC has also shown us a strong organic growth, and it has also shown us some appetite for inorganic growth as well. you have acquired L&T General Insurance in 2016 and Apollo Munich in 2019. So, Ritesh, can you tell us how these have worked for you?
So, you're right. We used to be a small company doing 200 crores of premium 15 years back, and we've actually been able to grow at about a 32% CAGR sort of over the last 15 years. Whilst the industry grew at a 16% CAGR, we've actually done 2 out of the 3 sort of M&As which have happened in our industry. And as you rightly said, in 2016 we acquired the L&T General Insurance franchise, and in 2019-2020 we acquired the Apollo Munich franchise. Whenever you go out and do any acquisition, there is some white space that you're trying to sort of answer, or there is some strengths that you want to acquire from the entity that you are taking on. L&T gave us a strong base into the OEM network of motor that they were working with, and today we work with 95% of the OEMs across private car and two-wheelers. Apollo Munich was a standalone health player, and they were very, very large on the retail health side and had a very large base of agents. These were 2 sort of areas that we wanted to grow on. So post Apollo Munich acquisition, we are now the 2nd largest retail health insurer in the country.
Wow.
So that's the strength that Apollo Munich gave us, and we have a strong base of 181,000 retail agents, which was the other strength that Apollo had, which essentially means that about 21% of our top line today comes from the agency network.
Right. So, Ritesh, you spoke about a spectacular growth of your company. How do you expect the growth of this sector in the next 5 to 7 years?
So, general insurance is a very, very important part of the entire financial services space. As the country grows, as more youngsters come into the working population, as you go out and acquire assets, there is also a need to protect these assets. Right. As India becomes an aging population, there is a very, very significant need to sort of have health insurance. Right. And these are really the 2 very, very significant spaces, the assets as well as the health insurance that our industry covers. Right. Just to give you a very, very sort of quick snapshot, India was the 28th largest country in terms of non-life in 2000. Right. The general insurance was 0.5% of our GDP. Right. We move forward 22 years, we are today 1% of the GDP. Wow. And we are today now the 15th largest in the world. Right. Sort of in terms of the non-life insurance. And you said what would happen in the future if I was to do some crystal ball gazing 10 years down the line. This 1% of the GDP is likely to move to about a 1.5% level, because as an industry we've been growing faster than the GDP growth rate at a 16% sort of CAGR. At which point in time, depending on how the other countries grow, we should be between 6th and 8th in the world in terms of the size of the Indian market.
Wow, that's incredible, incredible, Ritesh. So, Ritesh, speaking of penetrations, especially in general insurance, apart from the auto insurance, are you happy with how there's a rapid growth and an increase in penetrations right now? And what changes do you think will enable general insurance to the masses in rural areas?
So, as we said, there is a fair distance that we need to take. The insurance penetration in India is still on the non-life side 1% of the GDP. Right. The world average is 4%. Right. The Asia Pac average is 2%. So we've got a fair distance to travel. And you're absolutely right that with 67% of the country staying in rural India, we will have to take insurances to rural India. This is going to happen through a mix of a lot of government initiative which is there around Ayushman Bharat or around the Fasal Bima Yojana, and around there are products like Jeevan Jyoti Bima and the Sarv Suraksha Bima which is there, which is catering to life insurance, PA, crop insurance, health insurance which is there. But equally, there is an initiative of the government wherein of the regulator, in fact, wherein we are trying to sort of ensure that in every gram panchayat of the country, we've got one person who's taking care of insurance selling, and there is this entire concept of Bima Vag, which the industry is working along with the regulator. And this is also going to sort of help in terms of women empowerment, because the idea is that across the 250,000 plus gram panchayats in the country, we are able to sort of employ one women Bima Vag, who's actually then going to sort of initially sell a bespoke, sell a product which is templated, which cuts across life and non-life, and gradually open up to the others.
Right. So now, Ritesh, I'm going to come to a very tipsy topic of valuations. So basically, HDFC, and after the HDFC and HDFC Bank merger, the entity is, I think, the fourth largest bank franchise. Then you have HDFC Mutual Funds, which are, I think, India's largest asset management group. Then you have HDFC life insurance, right, which has, I think, the highest valuation. So, Ritesh, what do you think of HDFC ERGO when it's put against some of its competitors like ICICI Lombard?
So that's an interesting question that you pose, Ariman. Post the merger, the combined market cap of HDFC Bank becomes about $162 billion, which indeed makes it the fourth largest bank in terms of market cap around the world. And obviously, I mean, this market cap does not fully reflect the two entities, the life and the asset management companies, which are the listed entities. We are, of course, still not listed, and therefore, presently that is what the status is. But ICICI Lombard is the largest sort of private insurer.
Right.
From a valuation perspective, we do get ourselves, the last transaction which happened, pits us well in terms of from a valuation benchmark vis-a-vis our peers. The valuation on the general insurance industry side is largely a function of three multiples: the price to book, the price to GWP, and the price to earning.
Right.
And when I look at any of these three variables, we do reasonably well, whether we compare ourselves with ICICI Lombard or we compare ourselves with Star Health, which is the other listed insurance company on this side,
Right.
though not directly comparable because they are a standalone company.
Right. So, Ritesh, me being a youngster and a youth, I'm really concerned about environment deterioration. And so, could you tell us a few things which HDFC ERGO is doing to promote, sustainability and positively impact the environment?
Good. I think you've saved the best question for the last. I think sustainability is increasingly becoming very, very important, and it is something which is very, very important as to what is it that we leave behind for our next generation. We largely, if we were to look at sustainability from an insurance standpoint, there would, largely be three pillars that we can talk of. One is in terms of how do we help sustainability from the products that we sell.
Right.
And increasingly, the world over, there is a trend that people do not insure coal mines, or how do you insure power plants, and and so there is basically this trend in terms of how do you create products for solar energy, for renewable energy, how do you give incentives for electric vehicles.
Right.
So one is this entire bucket which is around what is it that you do from a product perspective.
Right.
The second is the bucket which is around the investments. As an insurance company, we've got a very, very large pool of investments.
Right.
And how do you sort of look at increasing or giving more investments or putting up more investments in entities
Right.
which score well on the sustainability. So there are indexes like the MSCI index.
Right.
So before we do any investment, we actually look at what is the MSCI score from a sustainability perspective for the entity, and there is a weightage that we give to our investment on that side.
And what's the scale of?
It is something which is basically sort of evolving. But I mean, increasingly there is a larger focus, and you would have heard of green bonds and all of this,
Right.
and therefore there is actually more receptivity,
Right.
and I mean a far greater demand for green bonds and some of these.
Right.
The third aspect is that what is it that we do around our employees and offices.
Right.
I mean, there are obviously a number of measures, because to how do you become carbon neutral at some stage? But there are then initiatives like how do we make sure that we consume less electricity? How do we have, I mean, say electricity or bulbs which are more friendly? So moving to the LED vis-a-vis the conventional bulbs, or how do you ensure that the air conditioning is at an optimal level? So that it doesn't burn in sort of consume sort of more electricity, or how during lunchtime we actually sort of switch off, and which is there. How we've gone in and worked towards ensuring that literally there is minimal paper which is there, so that we sort of cut less trees. So there are a number of these initiatives that we go in and do sort of from that. So these are really the three pillars basis which I mean, our organization is working.
Right. So thank you, Ritesh, for a very insightful interview. But before we conclude the interview, I have some this or that personal questions for you. So, tea, coffee, or smoothie?
Coffee.
Live alone or with roommates?
With roommates.
Roti or parathas?
Parathas.
Have a terrible boss and a good job, or a good boss and a terrible job?
A good boss and a terrible job.
Free college or free healthcare?
Free college.
Steal someone's lunch or have your lunch stolen?
Steal someone's lunch.
Be able to fly or run on water?
Run on water.
Right. So thank you, Ritesh, it was a really insightful interview. I think the youths of today will learn a lot from you, especially whether it be on the sustainability side or understanding businesses, and they'll definitely be inspired from you. And whoever is looking on to the insurance sector and whoever wants to go into this market, and there is a lot of growth and potential, as Ritesh said, maybe 1.5% of the GDP according to his crystal ball. So let's hope and see you. Thank you.
So before we close the interview, I have a question for you, Aaron.
Right.
Okay, I mean, I was just, as you went about asking your questions, I saw that, I mean, all these questions were, could only have come in after you've done some research on the sector, on HDFC ERGO and stuff. So how do you go about this whole process?
Yeah, so this is a very interesting question. I've never been asked such a question, but basically how I go about it is, initially I understand what HDFC ERGO stands for. I look at it on the internet. I go through their normal website, research it completely, go through your deals, your transactions, and get a small taste of it. Then I go into searching the large economy. It's not just micro, it's macro as well. You look at the picture as a whole. And then so what happens is, I go into your previous interviews, and see how you are as a personality, because this show is not just about the businesses but also about the personalities you are interviewing, and I must say I was enamored by your interviews, and I'm really grateful. So all of these ideas are just, one is general knowledge, the other thing is whatever is going on in the world. For example, in the newspapers recently, I think I read around thousands of articles on the HDFC merger, and I was actually enamored by it, about how it will not only impact HDFC as a company, but also HDFC ERGO and its other branches as well.
Good. I'm indeed impressed by the research that you do. All the very best. Thank you.
Thank you, Ritesh.